Now, let me get over here to the uptrend alerts here. Let's briefly talk about some of the new uptrend alerts we've had. New position uptrend alert we issued on physical silver. That was back in November the 4th. So it's been several days since that happened. That was actually back right around here. November the 4th was right in here. We got a nice rally on silver, or actually, it should say November the 4th, not November the 11th. But as you can see, we got a nice rally up here that rallied, and then it came up to the 200-day and then pulled back a little bit. But this is actually a bullish pullback because the volume has dissipated on the pullback. It rallied up with the price and then came down when the price came down. That's a good sign. Also, you have great support now at the 30 SMA at the $20 level. So silver obviously pushing higher or trying to push higher. If you look at this 15-year chart of physical silver, you see it's holding above that 1850-ish area of support and a really big multi-year support at around 1390. So again, volume not as big. We also had a big report come out from the Silver Institute a day or two ago telling us that they expect the biggest deficit in silver in a long time. I think it's quite frankly in decades. Nonetheless, with the economy slowing next year, according to most economists and according to the IMF and others, that means that, of course, the deficit in silver will, of course, be soothed by less demand, because as the global economy slows, the demand for silver slows. It is certainly an industrial metal with an investment component to it, but it's much more of an industrial metal than, say, something like gold. If you look at silver versus SPY, the S&P 500, it's trading the lowest level since 2006, 2005. So, if you compare silver to the S&P, it's incredibly cheap on a relative basis. We also called a new position uptrend in the Gold Miners ETF, GDX, back on November the 11th. We've seen a nice rally in GDX recently, and it's still showing a nice weekly print this week. So it's trying to get back above its 200-day. This is early times here for potential entry on gold miners. Gold miners really just peaked out back in April, around 42 on the GDX, and then just fell all the way to 22. I mean, they lost practically half of their value since April. So it was a real big blow on the gold miners side. It's starting to recover, and volume has really gotten better. The best volume we've seen pretty much all year except for February and March. I mean, a really good positive volume here supporting GDX. Also, the GDXJ ETF, which is also the juniors. These are a little lower quality, but they oftentimes perhaps have higher growth rates. Again, really good volume here coming in. Seem to be supporting this, but you still have a declining 50. That's going to be tough. Flat 200-day. We'll see how that turns out. This is, by the way, a weekly chart. I shouldn't say 200-day. 200 weekly and 50 weekly. My correction on that. Also, the Global X Silver Miners ETF. Back in November on the 11th, we called that one as well. And as you can see here, it's also trying to push higher. Same deal, though. We have the 50 and the 200 weekly, obviously overhead resistance. So there's more new position uptrend alerts in the Robinson report from last week. We've called several new uptrends over the last 2 or 3 weeks. That's really good. We didn't have anything this week, but we did for the last several weeks, and that's really a good sign that things are beginning to turn around.